A higher day on Monday, with the exception of soybeans. Here to visit about that is Brian Grady with Pro Farmer. And let's talk a little bit about Monday's closes. Corn and wheat higher, soybeans lower, and it looked like kind of some technically corrective action after closes. Weekly closes were in the opposite direction last week.
Yeah, I think the wheat market's probably the one there on Monday that really had the strongest indication of that. Got beat up pretty good last week, and then to open up the week, good strong corrective gains. We'll see if that continues or not. The dollar was really sharply lower on Monday, and that helped out the cause a little bit. And so there's some fundamental reasons too, but I think that most of it was just corrective buying, and then corn followed to the upside.
Right, and money flow, still part of the equation here, just like it was last week.
Absolutely, and we've talked in the past, and the money flow stuff is probably as important as the fundamentals right now. When you get into these extreme price levels, what the funds are doing on a day-to-day, week-to-week basis is very important. Probably more so important than the actual fundamentals, because in many of these markets, we're trading above what the fair fundamental value would argue to be anyway.
So I got to ask you, we put key reversals in the wheat market last week, really in all three exchanges. Do those mean anything when you're in this kind of an environment?
Well, they're a warning signal. There's no doubt about that. That hey, we've put in tops, and maybe that's the case. Seasonally, the winter wheat markets in particular, with harvest just around the corner here, they should be facing seasonal pressure. So anything outside of that is contra-seasonal and really impressive in the face of that. I think you have to respect the world situation right now and the uncertainty that's out there, especially on the wheat side of things, with who's going to be able to get supplies and those types of things. We are not going to run out of food around the world. Some countries will have the inability to get their hands on food because of either the price or the supply situation. And I think that that's kind of being misconstrued with the fact that we're going to run out of food supplies. That won't be the case, but it will be difficult for some to get their hands on it.
Sure. Corn got some help from the wheat market, but we very, very much had some strong weekly export inspections to help out too, right?
Oh, the strongest of the year so far, and very impressive number there. We continue to charge along on the corn export inspections, and the weekly pace needed to get to USDA's number continues to chunk down and chunk down pretty aggressively. And so I think that if we continue that pace, then we have to look and see whether USDA has to make adjustments to its corn export forecast or not.
What about weather?
Weather, it's kind of a mixed bag. I think for the bulk of the growing areas here, so the heart of the Corn Belt, Delta and Southeast, I think that any rains now are seen as positive for the crop and negative for price. And that's a flip of what we were trading. Now, the northern areas, so northwestern Corn Belt, upper Midwest, those types of areas, so the Plains, Minnesota, some of those northern states, still, planting progress is delayed. The start of the growing season is delayed, and so additional rains up there are actually negative for the crop and price supportive. So we kind of got two different things going on in terms of weather and the market impact.
Soybeans pulling back with some of that profit taking after a good week last week. Did we hit chart resistance, or what happened today?
Yeah, a lot of that's just technical action. We saw the soybeans post really good, impressive price gains in the face of what was going on in the wheat market, and to a lesser extent in corn last week. So to see them pull back after some overnight strength, probably not too much of a surprise. The meal market, it had been the weak link, and then last week it popped pretty good. It pulled back today, so we'll see where we move forward. But just across the grain and soy markets, corrected trade on Monday to open up the week.
No doubt. Cattle market impressive. Cattle on feed report was a bit on the bearish side, and so the market was able to shrug that off, wasn't it?
Definitely. The placements number came in a little bit below a year ago, but well above what the average trade estimate was, and even above the top end of the range of guesses there. And so that was really the negative number. And we gapped lower on the open, but that was the low of the day, and we immediately pushed higher, filled the gap, and then finished very strong with bullish reversals in some of those markets or some of those contracts, excuse me. And pretty impressive in the face of bearish news, and that's usually a sign of a bottom in a market is when you get bearish news or bullish news and you trade opposite of it. So we still have a lot of work to do. Bulls still have a lot of work to do, and it's not going to be easy. But the signs are there that maybe we have posted a short-term low at least.
Yeah, especially with the futures at such a discount to the cash, right? That should help catch that market too.
Yeah, so a lot of that was already baked in, I think, in terms of the cattle on feed report, the negative stuff, and that did allow us to fade that report. But you mentioned the discounts; they just gotten too wide, so the attitudes were too bearish, and we saw some corrective trade coming out of it as a result.
Another strong day on Monday in the hog market, $8 gains last week, and technically that market looks really good. Are we going to retest the contract highs, do you think?
Well, I'm not ready to go there quite yet, but when you do look at the technical action, there's an inverted head and shoulders formation. So good classic sign that of bottoming action there. They aren't long period of time by any means to form that inverted head and shoulders, but definitely pretty clean looking on the charts. And I think that this is probably the delayed start of a seasonal rally. We should have been rallying already by now seasonally. And they just hammered that market and too much so, and now we're starting that rally just later than what we should have.
Thanks for your analysis. As always, Brian Grady with ProFarmer.